The roar of the digital bull is unmistakable. Bitcoin is making headlines again. Its price is climbing fast and excitement is building in the financial world. Everyone seems to be talking about it, from Wall Street to Main Street. The digital currency is capturing imaginations and wallets. The buzz is, well, palpable. Is this another speculative bubble or something more profound? Only time will tell. Just a short while ago, Bitcoin hit new highs. It soared past the $100,000 mark, then it kept going. In late May 2025, it reached over $110,000. This was a significant moment for the cryptocurrency. It shattered its previous records with authority. Investors who held on are smiling and new investors are jumping in. The momentum feels incredibly strong. It's a powerful wave. The numbers themselves tell a dramatic story. On May 21, 2025, Bitcoin's price touched $110,797. That was a new all-time high. This current rally feels different in some ways. It is undeniably fast and incredibly powerful, and Bitcoin itself is clearly leading the charge. The king of crypto is asserting its dominance. Other digital coins, the so-called altcoins, are trying to keep up. But Bitcoin is setting the pace. It is the main attraction right now and all eyes are on its next move. Bitcoin's dominance in the market is a key factor to watch. It currently stands at a commanding 65%. This is a very high percentage. It means that the majority of new money flowing into the crypto space is going into Bitcoin. This suggests that institutional investors, the big players, are placing their trust primarily in Bitcoin. They see it as the most established digital asset. That 65% dominance figure is highly significant. It tells us a lot about market sentiment. It is approaching levels we last saw in 2021. Back then, Bitcoin's dominance briefly touched 74%. Such high levels indicate a strong focus on Bitcoin itself, rather than broader crypto speculation. It's a sign of a flight to perceived quality within the digital asset class. Some traders are making incredibly bold bets. They are not just optimistic, they are wildly bullish. They are betting that Bitcoin will hit $300,000. That's nearly triple its current record high. And they think it could happen very soon, by the end of this month, June 2025. This is a huge, almost unimaginable leap in such a short time frame. It's a bet that raises eyebrows. These highly speculative bets are being made using financial instruments called call options. On the Deribit exchange, a popular platform for crypto derivatives, the $300,000 June call option is the most popular. This indicates a high level of optimism, or perhaps sheer speculation, among a segment of traders. CoinDesk, a respected crypto news outlet, aptly characterized this particular bet as a lottery ticket. It's a long shot with a potentially massive payoff. Why would anyone make such a daring, almost audacious bet? There are several possible reasons. Some traders are likely trying to ride the powerful upward momentum. They see the price surging and want to capitalize on it. Others might be attempting to create FOMO, the fear of missing out. If enough people believe it can happen, their buying could help push the price higher. It's a self-fulfilling prophecy in theory. With such wild bets and soaring prices, a critical question arises. Is the market getting carried away? Is it becoming too excited, too exuberant? Are we perhaps entering what market analysts call a euphoria phase? This is a term used to describe a period when prices become very frothy, when rational thought gives way to collective enthusiasm. It often precedes a market correction. There are indeed some signs pointing in this direction. The option skew is one such indicator. It currently sits at negative 10%. In simple terms, this means that many more people are betting on prices going up, buying call options, than on prices going down, buying put options. This imbalance shows a strong bias towards upside speculation. It suggests a very bullish, perhaps overly bullish sentiment is prevailing. This strong, pronounced bias towards upside bets is particularly interesting. It is remarkably similar to the sentiment observed just before Bitcoin's major market top back in 2021. History doesn't always repeat itself perfectly, of course, but it often rhymes, as the saying goes. The patterns of human psychology and markets tend to recur. Greed and fear are powerful drivers. Section 5. Giants Speak, Institutional Predictions for Bitcoin's Ascent. It's not just individual retail traders who are feeling bullish about Bitcoin's prospects. Major, respected financial institutions are also making some very significant predictions. Standard Chartered is a prominent example. This is a global bank that manages a colossal $850 billion in assets. Their voice carries considerable weight in financial circles. They are taking Bitcoin seriously. Jeff Kendrick holds the position of head of digital assets at Standard Chartered. He has publicly stated his prediction. He believes Bitcoin could reach $200,000 by the end of 2025. That's a substantial increase from current levels. He identifies strong demand from Bitcoin exchange-traded funds, or ETFs, and the activity of large holders known as whales as key drivers for this potential growth. Standard Chartered isn't just looking at the near term. Their analysts are looking even further ahead. They foresee a potential price for Bitcoin of $500,000 by the year 2029. These are truly significant numbers, especially coming from a major established global bank. Section 6. Visionaries and veterans, more bullish voices emerge. Cathie Wood's investment firm ARK Invest is famous. They are known for their bold predictions about disruptive technologies, and they are exceptionally bullish on Bitcoin. Their best-case scenario for the digital currency is truly astounding. ARK Invest projects that Bitcoin could reach an incredible $2.4 million per coin by the year 2030. This is a headline-grabbing figure. This $2.4 million price target isn't just plucked from thin air. It's based on ARK Invest's detailed modeling. Their model includes several key assumptions. One major assumption is that Bitcoin ETFs will attract $13 trillion in inflows. Another is that Bitcoin will capture 60% of gold's total market capitalization. So far, only about 1% of such ETF inflows have been observed, but the amount is growing. Arthur Hayes is a well-known and often outspoken figure in the cryptocurrency world. He is the former CEO of the BitMEX exchange. He also has high hopes for Bitcoin's future price. Section 7. A new era. What makes this bull run different? This current Bitcoin bull cycle has several new ingredients. It's not simply a repeat performance of past rallies. There are distinct differences. One of the most significant new factors is the arrival of US-approved spot Bitcoin exchange-traded funds, or ETFs. This development is widely considered a game-changer for the entire crypto industry. It marks a new level of mainstream acceptance. These Bitcoin ETFs make it substantially easier for ordinary people and, crucially, for large institutions to invest in Bitcoin. They provide a regulated, familiar investment vehicle. They open up Bitcoin to a much wider audience than ever before. We have already witnessed significant inflows of capital into these new ETF products since their launch. This is fresh money entering the market. Other new factors are also distinguishing this bull run. We are now seeing nation-state involvement in Bitcoin mining. Some countries are officially mining Bitcoin as a strategic reserve. There is also growing interest from sovereign wealth funds. These are massive pools of government-owned capital. The possibility of central banks themselves buying Bitcoin is even being discussed. Section 8. Navigating the hype, a dose of reality for investors. The price predictions are undeniably exciting. We hear numbers like 200,000, 300,000, 1 million, and even $2.4 million per Bitcoin. It is very easy to get caught up in the hype. The enthusiasm can be infectious. But investors, both new and experienced, need to stay grounded. It is crucial to remember that the cryptocurrency market is famously volatile. Prices can swing wildly. While optimism is currently very high, it's essential to remember that these are predictions. They are educated guesses, albeit from some very smart people and institutions. They are not guarantees of future performance. The path to these very high price targets, if Bitcoin ever reaches them, will likely be extremely bumpy. There will almost certainly be significant ups and downs along the way. Sharp corrections are common. It is vitally important to have a rational and well thought out investment strategy. Never invest more money than you can comfortably afford to lose. This is a golden rule for any speculative asset. Do your own thorough research or understand the technology, the risks involved, and your own risk tolerance. Section 9. The path ahead. Prudence in a world of possibility. Bitcoin's journey so far has been nothing short of a wild, exhilarating ride. The recent surge to over $110,000 in May 2025 proves its enduring appeal and resilience. The predictions for its future price are dazzling, almost intoxicating. Some optimistic traders are betting on $300,000 by the end of this very month, June. This highlights the intense speculation currently gripping the market. Institutional adoption is clearly growing. The new Bitcoin ETFs are bringing fresh capital and new types of investors into the ecosystem. For many, the fundamental case for Bitcoin as a store of value or a new financial rail is stronger than it has ever been. Yet, it's crucial to acknowledge that the market remains highly speculative. It is prone to sudden and dramatic price swings, both up and down. That $300,000 June target is an exceptionally aggressive bet. It reflects the current state of euphoria and high expectations. While anything is possible in the world of crypto, it's important to consider this a very high-risk, potentially high-reward scenario. It is not a certainty. Prudent investors should not bet their entire financial future on such an outcome. Diversification and risk management are key.